After hitting a two-month high overnight, gold prices retreated Tuesday, mainly driven by recovery in the U.S. dollar. So where can the greenback go from here, and what will it mean for gold? Joining us now on the line is RBC Wealth Management's Managing Director, George Gero. George, great to have you back on the show.
Well, thank you very much for having me. You're one of my favorite people, so I'm delighted to be here.
Well, that means a lot, George. Thank you.
Okay.
Let's talk about the dollar action this morning.
Well, I think the dollar action is only one of the reasons why we expected gold to pull back today. We thought that the pullback will occur because on January 26th, you will have option expiration on COMEX. And open interest has grown from 402,000 to 486,000 just this month, and option open interest has grown from 992,000 to 1,082,000, all of which means that options on COMEX that are in the money, and many could be now, abandoned after today's action, but those that aren't, that are in the money, will become futures contracts the next day and require margin. Now, not only that, but on February 1st, which is First Notice Day, is also the day that the Fed will have a lot of information at their afternoon news, and the Fed minutes could probably tell us that the economy has done so well, and the stock market has shown you that, that the Fed rate hikes are coming.
Right.
And so traders are selling ahead of all of this.
Right. So a lot to look at when we're looking at gold, but we can't ignore the dollar here. And U.S. Treasury Secretary nominee Steve MNUCHIN commented on the dollar Monday, reportedly writing to the Senate that he favors a weaker currency, but it didn't move markets. So why do you think?
Because you can't move markets just with someone talking about the dollar unless they're from the Fed these days, or unless you can see what effects the movements have on other currencies. Now, because of Brexit and because of the fears of the elections upcoming in France and Germany, and because of the pounding of the Turkish lira, and all these other worries have shown that if we continue to move higher, as the Fed has indicated, the dollar will strengthen also because people from other countries are moving their money into U.S.-denominated assets.
So, George, you see a stronger dollar from here?
I see a strong dollar. Also, look at the stock market. Record numbers again for NASDAQ today. Stock market at highs, approaching 20,000 again. All of that means that all the world that moves money into the U.S. to buy U.S. stocks has to buy dollars.
So George, if you're bullish the U.S. dollar, how does that translate into gold? You know, it's having a good run since the start of the year. Obviously, we're down today, but overall, a good run. How are you seeing it looking so far this year?
Oh, I think later on this year, probably shortly after option expiration and after First Notice Day, we'll go back to basics. And you don't count out the dollar move as negative for gold, because I remember on the floor of the exchange years and years ago, we had high interest rates and we had a higher dollar, and gold was moving because of inflation. And so inflation definitely looks like is coming along and will be a part of the economic story going forward.
Thank you, George.
Thank you, and thank you for having me.
And thank you for watching. Stay tuned. We've got Frank Holmes up next.